Hello guys, in this video I will talk about candlestick formation and how we can build our strategy or our model based on this. But first guys, I would like to talk about AMD or power of 3. So AMD means accumulation, manipulation and distribution. So normally accumulation happens near the open of the candle. Manipulation because it's like fake move before a real move, before range expansion, before distribution, and manipulation usually forms low or high of the candle. So distribution is range expansion because it's like a real move and it will form high or low of the candle. But how we can actually use this to frame our setup and how we can build the model around this? So we have a question. How will I understand if it's bullish or bearish candle? That's absolutely amazing question. Let's consider potential candlestick formation, right? So first, let's dive into candlestick formation. So I will talk about down close candle, but exactly same idea will apply for up close candle. So here's example of down close candle. So obviously when we're talking about potential down close candle or up close candle, we cannot know for sure if it's going to be up close candle or down close candle. First, what we must understand is high time frame bias, direction of the trend, right? And only at this point we can anticipate, but we cannot say for sure if it's going to be up close candle and down close candle. So let's say we are bearish, high time frame bearish, everything tells us it's going down. So this means we anticipate to get potential down close candle. And in order to be down close candle, what should happen first? We must go up first. Yeah, that sounds crazy, and normally in real time it will look, it's about to form bullish candle right here. But in reality, when we have high time frame, for example, bearish trend, right? We anticipate to get, it will form open, manipulate higher to form high of the candle right here, and range expansion will offer move down in the direction of high time frame trend. This means once again we got open, price retraced higher. So we're about to get reversal. What is this? No, because it's like fake move, because it's like manipulation, which most likely will form high. So right here, so what we can see in real time, price going higher. Interesting up close candle, but then it's sharp retracement back down to open right here. Right now we have high of the candle, right? So, and in order to consider potential distribution lower setup for short, we must understand that most likely our setup for short will occur above open, somewhere right here, right? So once high formed, we anticipate to see a framework for distribution between open and high of this candle. So I will talk about later today, but what I would like to see a potential setup inside this purple box. Well, perfect. As I said before, we anticipate to get short setup framework for distribution between open and high of the candle. So what we have for now, we already see price offered like sharp move up right at the open of this candle, then sharp retracement down, forming like pretty much big wick and small body. So at this point, since high time frame is bearish in our example, right? So we anticipate to get short setup once again between open of this candle and high. This means on low time frame, this wick right here will look like this. This means at this point, wick right here will tell us story, right? Right after this, once again, we anticipate to get setup right here, and we're trading in the direction of high time frame trend. We anticipate to see price continue going lower, also down. Maybe it will reach high time frame level. Then we will get minor retracement up, which will offer close of this candle, and this move down will offer a low of this candle. Once again, we always consider the candlestick formation in the direction of high time frame bias, high time frame trend. Well, we have a question. Oh, great, that looks so easy, but how should I trade it? My answer is we must use timeframe alignment. So what is timeframe alignment? This means if you're looking for the high timeframe trend, obviously we're looking for high timeframe candles first. So we anticipate, we're trying to predict, we have, for example, a monthly bullish trend, probably next monthly candle is going to be bullish because monthly trend is bullish, right? So at this point, I'm not going to just blindly press like buy button right here. No, I'm going to use time frame alignment to look for best entry below what? Below open of monthly candle, because if high time frame is bullish, I will look for the long below the open. So at this point, we have time frame alignment chart right here. So if I have, let's say we consider potential monthly candlestick formation, at this point, I will switch on lower time frame and it's going to be daily chart. So look for setup for long. And at this point, I will look for the long below open of monthly candle. So WICK forms framework for distribution. So let's talk about potential weekly candle, because we intraday traders and normally we're trying to understand what WICK can offer us, right, from Monday to Friday. And at this point, we're looking for the, for example, short above weekly open, or we're looking for long below weekly open. And obviously, we're not going to blindly press like sell button or buy button because we above or below weekly open, right? At this point, we are going to switch on for a chart, which is going to be lower time frame for weekly high time frame chart, right? And then for a chart, I will look for the, once again, short above weekly open, and I will look for the long below weekly open. Exactly same idea will apply for daily, but I will use hourly chart. For a chart, I will use a 15-minute chart, hourly 5-minute chart, 15 1-minute chart. Personally, normally I use for my intraday trading for a chart and 1-hour chart. But you can use 15-minute chart and 1-minute executions. Absolutely nothing wrong with this. I would say personal preference. So as I already said, we're looking for the long below open of the candle. Any candle, high time frame candle, low time frame candle, it will apply everywhere. Or we're looking for short above open of the candle. So how we actually should trade this? So at this point, we must wait for classic smart money reversal with entry at fair value gap, for example, one smart money reversal confirmed, and I explained this in my market maker model video. Or we're looking for a classic smart money reversal confirmed by order block entry. And yes, I put interesting point right here, ideally with SMT. If you trade in Q and ES mostly, any other instrument as well, but I'm an Q trader, ES trader, I will look for SMT because it confirms high probability setup at this point. Once you can get SMT, I'm more confident with the executions, and I usually execute with bigger size once you can get SMT at this point. Okay, next. Once again, I want to make a quick note right here. Don't blindly buy below open or short above open, right? Why? We only buy or sell in the direction of high time frame trend, as I said before. And high time frame context is key to frame setups. Once again, if market is bullish, but you clearly can see, it went above open of hourly candle, I'm going to just switch on 2 or 5-minute chart, let's short this. Obviously not. Probably you're going to stop out. Your task is to understand high time frame trend and look for the setup in the direction of high time frame trend, right? Always, and once again, always. Well, here's example. Let's say we have daily bearish trend. And right here, we clearly can see our potential daily candle formation, candlestick formation, right? So what we have? Price opened right here, right? Right here. Offered move up right here. And what happened right here? We reversed, right? We reversed, and reversal happened above the open and offered potential high of this candle right here. So what I should use to confirm this? At this point, I can use smart money reversal confirmed with entry, like fair value gap or order block. At this point, we got like 2 entries, right? So we got order block right here. So price with this displacement right here, right? Displaced right here, closed below low of this candle, offered order block, retrace back to this order block and retrace to this fair value gap. So I can place my entry right here with stop loss above this high right here, and I'm going to aim for 2-hour trade, projections, liquidity, high time frame levels. So let's say we have weekly candle right here. So high time frame is bullish. So we got open, price dropped. And at this point, as you can see, we got like strong 2 4 down close candles, thinking, probably we are going to drop right here. But we must consider high time frame trend first, right? At this point, we will look for the long below the open of weekly candle, and we can use, for example, smart money reversal with entry as order block. We got the closure with displacement. We can wait for the displacement down to this order block, to place our trade with stop loss below this low, or we can our aggressive entry is going to be right at the open of this next candle. Once we got the closure, stop loss is going to be right here. We are going to aim for 2R, liquidity level, projections, or high time frame level, right? Okay, great. Next question. This sounds so easy, right? But I don't understand how to pick the right order block. I guess that's the most common issue, right? Oh, don't worry. I can offer a couple of options how to pick order block. Okay, option number 1. Use the very first candle as a tapped high time frame level. For example, let's say this red box is high time frame level. For example, daily fair value gap, daily order block, daily breaker block, whatever, high time frame level. What happened with this move up? We got first touch, second touch, third touch. The very first candle that touches high time frame level was right here, right? So at this point, I'm going to use 1, 2. I'm going to use order block, 2 candles for order block because this candle touches high time frame level first. So at this point, order block will be 2 candles. Let's say this candle failed to take this high time frame level. Only this candle touched this. At this point, I will use only this second up close candle for my order block, and we'll look for entry around this order block right here. For example, here is in Q chart, we got 4-hour candle. Here's 5-minute chart right here, which is lower time frame based on our time frame alignment. So what happened right here? I believe we touched high time frame level. We got open of this candle right here, right? Price consolidated, which is accumulation. Then we got fake move down, which offered low of this candle right here, right? Offered liquidity sweep. So the very first candle that offered this sweep was right here. So I'm not going to use like 1, 2, 3, 4, 5, 6 candles right here. I will use only 1 candle that touches sell side right here. Perfect. I'm going to use my entry right here because displaced above this high right here, only above this candle, high of this candle right here. So I will look for the entry at the open of next candle. Stop loss right here. I will aim for 2R. I will aim for liquidity level. I will aim for standard deviation, high time frame level. Option number 2. So I can use sequence of up close candle and down close candles. So once again, we have 2 options. It's up to you what you want to pick. So once you got sequence of up close candles or down close candles, you wait for the closure. We closed right here. I'm going to open my trade at the open of this candle. Stop loss is going to be right here and target liquidity level, projections. It's up to you. 2R, high time frame level. So once again, we're looking for the short above open of this candle in the direction of high time frame trend. We have another question. How should I pick the target? That's a great question. So you can use standard deviation projections. You can just aim for 2R. You can just use liquidity levels, which can be internal liquidity levels, or you can aim for high time frame levels. So for example, for standard deviation projections, you can use the very last leg. I call this like impulse leg before smart money reversal. So let's say we got open of this candle, price pretty much accumulated, then offered sharp move down. So I'll be looking for the long below open of this candle. So we got this sharp move down, impulse leg, right? Last leg before smart money reversal. And let's say somewhere right here, price displaced higher, offered order block, fair value gap, any signs of smart money reversal. So target probably will be the range between 2 and 2.5 or 4 standard deviation. So normally I try to take partials or more positions off at the range between 2 and 2.5. We got early candle. I highlighted open of this candle right here. And once again, we're only trading in the direction of high time frame trend, right? At this point, we got open, price drop down, right? Over it low this candle right here. So we're looking for the long below open of early candle. We're waiting for the order block. And at this point, we got sweep. I'm going to use only this one down close candle, order block. I'm going to place my entry right here, stop loss below this low. And I'm going to aim, for example, for internal liquidity level right here and right here. I'm going to just aim for the range between 2 and 2.5. For liquidity levels, I prefer to use internal liquidity as my target, first target. And I usually leave for my running toward external range liquidity. It's up to you. Once again, you can just close your trades internal liquidity levels, watching for reversal right here because we tapped high time frame level, and our direction of the trend is bearish right now. Okay, we got the open of this candle. I highlighted this right here, right? Then price retraced higher, continue going higher, which makes me feel like, it's about to continue in the direction of this trend. But once again, I want to keep in mind, if you already tap high time frame level, I'm not interested in continuation. I'm looking for a retracement, a reversal, right? Price displays lower right after this, above open of hourly candle right here, right? Offered what? Order block. I'm going to place my entry, for example, at the test or at the open of this candle right here. We stop above high of this candle. First internal liquidity level, second internal liquidity level, and we have external range liquidity right here. I can close my trade right here, which will offer, I would say, more than 4-hour trade right there, right? Or I can use, for example, last swing low, last swing high, pull my projections, and I'm going to aim for 2.5 or first standard deviation, right? I miss the first entry, for example, for a value gap or order block. Once we got, for example, long below open of high time frame candle. What should I do with this? At this point, I will wait for the formation of new candle. That's it. Okay. If price still has high time frame level higher or lower, next candle normally is continuation candle, right? Continuation of the trend. At this point, you can use retracement to near fair value gap, right below or above new candle open, or if, let's say, we don't have any fair value gaps, near fair value gaps, that's important. We're going to wait for the formation of new order block. Let's take a look at examples. Okay, we got early candle right here. I highlighted open of this candle, and I called framework for distribution below open of this candle, right? And potential low. So low formed, we got SMT, which is very important, right? So low in is in once we got order block or first sign of smart money reversal, right? At this point, what we got? Sequence of down close candles. I'm going to use 2 candles, or you can just use this one candle that offered sweep. It's up to you. Once again, you have 2 options to do this, right? So at this point, I would like to use 2 down close candles as order block. Okay, we got displacement, SMT, sell side right here. We're already below open of this. I believe it was 4-hour candles right here. It doesn't really matter, but framework for distribution is going to be below open of this candle. So we got order block. Let's say I missed entry at this for a value gap or order block. It's okay. It's okay. I'm just going to wait for the formation of new candle. We did not reach high time frame level. We still have room to go higher. That's fine. And since anticipated continuation, probably it will be minor retracement before continuing higher, right? At this point, we got open of this candle right here. On lower time frame, it's going to look like this. We retrace where? To fair value gap. So I'm going to place my entry right here with stop loss below near swing low, and I'm going to aim for high time frame level, right? Another example, what we have right here, framework for distribution, right? We got retracement down to this order block right here. I miss this entry, price continue going higher, expansion higher, just straight move up. Okay, miss entry, what I want to do next? I'm going to wait for the open of next candle right here. Price retrace down. As you can see, it failed to retrace to fair value gap right here. Instead, just reversed, offered new order block right here, basically the closure above the sequence of these down close candles. I'm going to put my entry at the open of this candle, retest. Stop loss is going to be below swing low. I'm going to aim for high time frame level, internal, external range liquidity levels, right? Projections. Once again, it's up to you. Here's a weekly candle, right? Perfect weekly candle right here. And since it's weekly candle, I'm going to switch on 4 chart to look for the framework for distribution, right? So, okay, as you can see, price, we got weekly open right here. What happened? We simply continue going lower. And obviously, we want to just check for our chart. Our direction of the trend is bullish. So we cannot short, we did not take any liquidity levels, absolutely nothing significant happened, right? So I'm still bullish. This means I would like to see weekly candle, probably is going to be up close candle, probably, right? And at this point, what I want to do, I would like to look for the long opportunity below open of weekly candle. Okay, we got open of weekly candle right here, right? Here's the open. What happened next? Price dropped right here, right? Retrace back to weekly open. Absolutely nothing significant happened. Order block not formed right here. I still would like to see lower because I need to see order block formation to anticipate potential smart money reversal. Okay, price dropped again, trying to retrace again. Did offer it order block for me? No, I don't have any signs of smart money reversal yet, right? So, okay, but we swept this low right here. That's it. We don't have any other signs. For me, it's very important to consider my long trade based on order block or retracement of to fair value gap. But once again, very important to have smart money reversal. And smart money reversal usually confirms by what? Market structure shift with change in the state of delivery or change in the state of delivery with inversion. So order block is necessary at this point. Always, 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 always. Without order block, probably will not confirm smart money reversal. So in our option to enter using fair value gap or order block itself, right? So at this point, we got a sweep right here, but order block failed to form right here. Staying away, still trading below weekly open. One more move lower, another sweep. Like we got double sweep, right? So price displaced right here, offered order block. So at this point, I can start talking about what? I can start talking about potential reversal, right? So at this point, I'm going to look for the entry. So we have options. We have small fair value gap right here. Once we got order block, right? For example, I can just place my entry as the test of this fair value gap or the test of this order block. It's up to you. It's up to you. You have options. Stop loss below swing low. And we have, let's consider a couple of options for entry, for target. So we are going to aim for simply 2-hour trade, looking for internal or external range liquidities, which is, for example, is going to be right here, right? For example, right here, we have high time levels, right? Still higher, for example, right here, which also can be like equal highs. Once again, it's up to you. Or another option, we can use simply projections, right? From this swing high to this swing low right here. And I'm going to aim for the 2 and 2.5, which lines up with 2R. And we have liquidity level right here. So I have option to aim for range between liquidity right here and 2 standard deviation right here. So once again, we discussed this on live stream, but I'd like to cover this again. So as you can see, we got a huge move up Monday night. So what happened right here? Price took this 2 and 2.5, liquidity 2R. So once again, our idea is to build the framework below open of weekly candle if we have up trend, right? Bullish high frame trend. At this point, I will look for the order block. And once again, it's very important to understand that smart money reversal normally confirms by lower time frame OB, change in the state of delivery, right? And market structure shift or inversion fair value gap. So it's up to you what you want to pick for smart money reversal. Normally, I prefer to have order block with market structure shift. Once again, it's up to you. Right here, we got classic smart money reversal according to ICT, right? And our idea for entry was fair value gap or order block. And this order block, at this point, we got fair value gap and order block. Okay, guys, I hope you enjoyed this video. I hope you learned something new today. And I will see you next time, guys. Bye-bye.